So we have to talk about Tesla stock again, being up another 2% since the last video just a few days ago. And since we've seen some fairly huge pullbacks at the beginning of the year, this also means that the now second try to reach the old highs again continues. But as the stock still isn't able to break much higher than $580 and is also down on the day, what we are going to do today is give you an updated insight into what is actually happening to Tesla's stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Really quick before we start, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And as almost every single person in countries like the US already know about Tesla, we can certainly say that we're looking at one of the biggest EV maker in the world with promising upside in solar and energy storage. But there are a few crucial things we have to talk about here, with the most recent one being Tesla's activities in China. And as some of you've probably already seen, the company got a ton of press coverage recently, much of which has been focused on its troubles in China. This all began in early 2019 when Tesla started building its Gigafactory Shanghai, making the company the first foreign automaker to operate a wholly owned plant in China, which is absolutely insane. And with China also being the world's largest electric vehicle market in terms of cars on the road, there are some incredible growth opportunities for Tesla coming up. And it actually started working out pretty well. The company was able to deliver its first China-made Model 3 in late 2019, while also starting to produce the Model Y in Shanghai last year. When an angry customers protest about quality issues and the safety of Tesla vehicles at the Auto Shanghai Expo went viral, however, a few problems started. Sparked from this, for example, people took to social media to complain about allegedly happening arrogance and quality problems, with the result of Tesla needing to publicly apologize, promising to create a customer satisfaction unit in the region. What was even worse, and this is crucial to consider for our prediction at the end, after an investigation, a Chinese regulator said the cruise control system in Tesla vehicles could be inadvertently activated, causing unexpected acceleration. Tesla then had to upgrade over 285,000 remotely, without the need for the customers to drive to a nearby dealership. But after dipping in April, demand for Tesla vehicles has rebounded massively in China, as evidenced by growing unit sales on a month-over-month basis. And the company is already pulling some incredible numbers. Between January and May 2021, Tesla captured 12% of the EV market in China, ranking the company third behind the biggest competitors there. But as CEO Elon Musk believes China will eventually be the largest market for electric vehicles, if Tesla is to be a long-term global leader, it needs to be a major player in China. That makes sense given that the country currently represents nearly half of the EV market worldwide. But taking a look at the Western countries, Tesla also faces some issues you have to know about, as there are super important for the future success of the company. The biggest one here, and we also talked about this before, are the massive amounts of new competition entering the electric vehicle space right now. So literally every legacy automaker is currently transitioning to an EV-heavier lineup. But you need to keep in mind that Tesla currently has a big advantage. And this is mainly due to both news about the company and his CEO, Elon Musk, being of significant market interest. Tesla announced first quarter metrics in late April, with revenue being at almost $11 billion. Net income of $438 million translated into earnings of 93 cents per share. And as management said, Tesla achieved its highest ever vehicle production and deliveries. So as the stock is still relatively cheap with huge upside potential at least up to its old highs, it would make sense to buy more shares right now. As said before, it is more than likely that the long-term rally continues and prices will go up again. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.